What's going on, guys? Welcome into today's episode. My guest is Henry Yoshida, founder and CEO of Rocket Dollar, which is a fintech platform that is revolutionizing how investors use retirement funds, specifically IRA funds, to access private and alternative investments. In today's episode, we break down the power of self-directed IRAs like you've never heard before. I know I hadn't, and we dove into why $20 trillion in retirement accounts is sitting untapped for private deals and where the opportunity is at there, what investors can actually buy through self-directed IRAs, and what they legally can't buy through self-directed IRAs. We also talked about how Rocket Dollar makes it possible to invest in real estate, crypto, private equity, even pickleball leagues. You're going to love the case study on that one, using tax advantage dollars through their platform. Common mistakes that investors are making with their retirement accounts and how you can avoid them. We also talked about how sponsors and fund managers can unlock new capital by tapping into massive funding pools like this. So if you've ever thought, hey, I'd invest in that deal if only I had the cash, and you knew that that cash was sitting in a retirement account that you didn't think you could invest out of, this episode will open your eyes to a whole new capital source, a whole new world of possibilities hiding in plain sight. Get ready to rethink how you build and deploy your retirement wealth or help other investors do the same. Let's dive into today's episode with Henry Yoshida. Welcome into the show, Henry Yoshida.
How's it going, Matt? Good to talk to you today.
Absolutely, brother. Glad to have you in here. For people who don't know who you are, and kind of what your company does, what is, Rocket Dollar, and why, or what inspired you to start it?
Rocket Dollar, we are, I guess the term now is fintech, but I like to say we're more of let's say an investment fintech company. The genesis for the company, we're an IRA provider, so we sell IRA accounts online, but we have all the tax treatments of a normal IRA, pretty ubiquitous type of account that tens of millions of Americans own. But instead of stocks, bonds, and mutual funds, we enable our customers to hold private and alternative investments in those IRA accounts. So think maybe crypto on one end of the spectrum, all the way to single family rental real estate in the other, and anything private and alternative in between. So private equity, venture, invest directly in a company. And it just kind of came about as an idea that I've worked with the retirement accounts across corporate career, my other entrepreneurial ventures, services company, another tech company. And there was just a need. A lot of people, there's over almost $20 trillion in IRA accounts. The market's up again today, about to hit a near record high. Again, despite all the turmoil that we kind of perceive is happening in the news. And with $20 trillion in IRA accounts, less than 1% of that money is invested in anything outside of stocks and bonds. So for me, the idea is just that, hey, if I create a platform or a company that enables people to get access to that money to go into private and alt investments, this is a pretty big opportunity for me. And that's what I've been running since 2019, Rocket Dollar.
Amazing. And you had a previous exit, correct? Was that Honest Dollar?
Yeah, so it's kind of a moniker. So I just had a bunch of domain names with something dollar inside. I have a bunch of others. So if anyone's interested, ping me. I got 50 or 60 or so. But yeah, an Honest Dollar was actually what I like to refer to that as is a company that sort of taught me a lesson in the form of, let's say, a go-to-market or a product market fit failure that led me to the idea for Rocket Dollar. And I can explain there. But that company did have an exit. So it got acquired by Goldman Sachs in 2016, which on the surface sounds great, but it got acquired in a distressed mode. So you'd be amazed, maybe not so much so, but Goldman Sachs kind of knows when there's an opportunity to pounce and acquire something at a discount. So that's what they did. And the business there was just a pure mobile app based investment platform, but we were going after a customer base that didn't have a lot of assets. So the value of the customer wasn't high enough. So that's what led me to Rocket Dollar in the first place, after the fact, after the exit, and kind of reflecting on what type of product is worth building. And the idea was to go after where the money was, tap into those individuals who already have these 18 to $20 trillion, and then allow them to go into investments that they can't access with where they're holding that money now. So that sort of business actually led to the success or the creation. Maybe ultimate success is yet to be determined on Rocket Dollar, but it came from the prior exit, Honest Dollar.
That's great, man. I love that. It's funny how, in hindsight, right, you don't necessarily always recognize it or see it when you're in proximity to it, but when you have a little bit of time and space from it, looking at some of the stepping stones that often felt like maybe failures, or I always look at every failure as kind of a failing forward or a failing up moment. There's always some silver lining in it, but obviously that led you to Rocket Dollar. And specifically, what problem would you say Rocket Dollar solves that previously wasn't available without your brand and platform?
So I guess the problem was, of course, really that the money's there, the capital's there, and it's invested in just basic stocks, bonds, mutual funds. And
Right.
at the end of the day, the number of publicly available stocks has actually been declining very steadily since the beginning of this century. We used to have 8,000 publicly traded stocks in the early 2000s, and we went all the way down to 3,770, and now we're back up to about 4,000 right now. So, and then as we all know, those publicly traded stocks are really dominated right now in the U.S. markets, at least by the top 5, 6, 7 of these stocks.
The Mag 7, right? Yeah.
Yeah, and even as we record this and talk today, Nvidia hit a $4 trillion market cap, so the first
Crazy.
company to hit 4 trillion in history, and it only hit 1 trillion 2 years and 2 months ago. So it's really dominated, very top heavy. So the problem we're solving is that for people to get true diversification or
Right.
to access investment opportunities that are outside of this publicly available stock market or mutual fund or traditional incumbent financial services world, um, it was really, really difficult. And then even if you could find these particular deals, so we're not solving for that problem at Rocket Dollar, but we're going after the people that have already found these deals. But then the problem becomes, well, where do I get the capital to access these deals? And what we found is that a lot of accumulated investment dollars in the United States are held in these tax deferred accounts that can't be accessed until you're 59 and a half. They have great tax treatment and they're long-term monies, but they can't be connected to these private and alt investments, which tend to have lower liquidity, longer hold periods, and
Right.
require larger amounts of capital up front. I mean, Nvidia is a highly priced stock, but you can buy $1 of it if you want in a fractional share. In a typical private deal, you might need 10, 15, 20, $50,000 just to buy one unit into that deal. And the money is sitting in an account type that their current providers don't let them go into these types of deals. So we're just that bridge in the gap. So we're that picks and shovels company at Rocket Dollar that says, hey, we basically help you get access to the monies that you've already saved and they're already earmarked for investments and long-term holding with good tax treatment to go into these private and alternative deals so you can diversify away from the 4,000 publicly traded stocks that are dominated by the top 7. And I would argue even more so by the top 3.5 of those.
Yeah. Yeah, absolutely. It seems like the category kings continue to consolidate and swallow up, and would you say that is probably a reason why we're seeing less, available stocks and companies to purchase on the publicly traded market? Or why do you think there's been such a, consolidation of opportunity? Um, I have my suspicions, but I'm curious on your thoughts.
Sure, and maybe these align, Matt. But so the reason for this sort of top-heavy consolidation and just lower number of overall publicly traded stocks is actually has to do also with the private investment world. So companies have access to private capital, so they don't have to go and list and go publicly list their shares for sale to the retail investor like you and I as
Right.
individuals, and so forth. So that sort of availability of private capital, private equity firms, investment firms, venture firms, and so forth, have allowed companies to stay private. So I've talked about this a lot, both in print articles in Forbes, Fortune, you name it, and then on other shows. But you know, we were able to invest in Amazon when it went public when they did under 30 million a year in revenue. We're in the Prime Day deals now, and whether that's a success or not, I venture to guess that since we've been talking, Amazon has done well in excess of $30 million in revenue, probably 300 million in revenue since we started talking about 4.5 minutes ago.
That's insane.
Um, but it was available for purchase by an average retail individual investor through, at that time, probably their stockbroker and maybe an early adopter of an E-Trade, um, and so forth, to buy a share into that company's stock. Whereas today, if you have access to private markets, you might get the opportunity to look at a secondary share deal in the private space into companies like SpaceX and OpenAI at valuations of 200, 300, 400, and 500 billion dollars, which if they were to be public right now, would also automatically put them into the top 10 in the
Yeah.
S&P 500.
Yeah. It's wild, right? I think there's been over the last few decades this shift of access, I guess, is what has created some differences in how companies determine how they raise capital and how they position themselves for their shareholders or their investors.
Exactly. And then, if you want, I can tell your community a funny story. But I met Jerry Yang. Him and David Filo are the two founders of Yahoo. So I met him at an event in the Bay Area one time, and I was talking to him, and he was telling this story. He said that when they had gotten an early round of venture funding, and then they were getting pressure to go public quickly at Yahoo. Now, ultimately, the stock wasn't the greatest of all stocks, but it did make people a lot of money. And when they were filling out the paperwork to go public, there was a box that said, what is your annual revenue? And they were under 1 million, but the boxes started with pre-filled 6 zeros. So he just rounded up to one and put one, because there were already 6 zeros on this paper form at the time, so they could go public. So it just makes you think that a company like Yahoo went public in the 90s to sell their shares in the open market at pre $1 million in revenue.
That's wild. Now, for someone new, what can you actually invest in with a Rocket Dollar account?
Sure. So for us, it's a lot of bring your own deal. So people who are starting to get exposed or starting to look into private and alternative investments, um, they kind of come to us and they open an account and they know what private deal they want to do. But for purposes of answering your question at a high level, the easier way to ask that question is usually what you can't invest in with
There
an
we go.
IRA. So IRA started with a tax law in 1974 called ERISA. It stands for the Employees Retirement Income Security Act of 1974. And at that time, they codified in the code that there were two things that you cannot buy with IRAs. So that presumably, from a pure legal interpretation standpoint, meant that anything that was not one of these two things could be purchased using an IRA type of account. So those two things that you can't purchase are an easier way to define what is allowed or not allowed. And those things were life insurance or life insurance policies and collectibles. So I like to call those like the show me asset. So you can't put a painting that you have on the wall in your house, a famous painting, a baseball card, or like vintage sneakers or anything like that inside of your IRAs. So what ended up happening was that the companies that started offering the IRAs, well, they were also in the business of helping companies go public. They were in the business of packaging up companies into a portfolio and selling it in a mutual fund type scenario. So it kind of became believed that IRAs couldn't hold anything outside of publicly traded investment vehicle. So in our case, our custodian backend, we enable you to basically hold title per se. That's just the best analogy I can use to private investments, and we also put that inside of an IRA umbrella. So we, as your custodian, the hold as a custody paper control of that private investment that you do inside of the IRA that we provide to you. So again, that goes for cryptocurrency, single family real estate. You could become an LP, which stands for limited partner, you into a private equity or a private venture fund. Whenever they take their investments into these funds, you sign up and you fill out a subscription agreement and you become a limited partner. You could buy a unit into a real estate syndication. It's just there's lots of things. So I think across our $12 billion of total assets under custody, we might represent, I think, somewhere in upwards of 9,000 different
Wow.
investments. Yeah,
Okay.
they're categorized. I mean,
Yep.
they chunk up, and there's a large component in real estate. There's a large component into private direct investments into small private companies. And then the balance is maybe LPs and some small part crypto. Crypto is mostly done through a sister brand of ours called Bitcoin IRA. So that's more direct and specific to cryptocurrency.
Very cool. Yeah, I can imagine, with cryptocurrency and I would say it's still very early from a macro perspective for people
Sure.
like us being a little bit closer to kind of the investing and financial services world. It seems like it's definitely getting some traction and much more adoption, mainly on an institutional level. But retail is obviously still kind of driving a lot of that. What would you say are, and I think you alluded to some of it, but from the 30,000-foot view that you have looking down on your guys' entire portfolio, what would you say are the most common, types of private alternatives that your investors are buying and why?
I think the most common ones are they buy syndication shares into like a real estate syndication. That's pretty common. Um they they usually find someone to get pretty good yields right now. Another one is private credit. So we have people that are making investments into a private credit fund. So they're accumulating capital to then loan out. Right now, it's difficult for people to access credit from or big lines from banks. So
Yeah.
there's this they've created this whole private credit world. And then third would be real estate directly. So directly held real estate. So in the form of single family properties are the biggest ones that we see. That's always been a big one. And then actually fourth, because it's kind of in a secular bull market now. So I've given lots of commentaries on this, and I have one that should hit, I think, like today, this morning, but gold, precious metals. So, ironically enough, gold may touch $4,000 per ounce this year. I mean, we're in the mid 3,000s, and I remember thinking that it was a secular bull market move when it hit 2,750 and 3,000. And I feel like every time it hits that other new $250 milestone, I'm saying it again and again.
Yeah.
So we have people doing that as well. But it's pretty broad based, but just think of the things that people might do that would be considered a zag if the stock market itself is a zig and
Hmm.
so forth. So that's the way the mentality goes. So like real estate is very tangible. People like that and they tend to understand their local area. I mean, I always give the phrase and tell people that, in a way, if you think about it, there's certain parts of the investment world or knowledge world that you control where you're your own Warren Buffett. Like your particular area,
Yep.
the outskirts, where the development's going more than, some professional investor on Wall Street and so forth. So you have an edge there. So if you can find a real estate syndication or someone to partner with, or you have capital enough in an IRA, then open up one at Rocket Dollar, transfer it in from that traditional type provider or your old 401k at your corporate job, then go purchase a single family property because that's an up and coming area because you see the sign that says Costco will be there in 2027. So you're like,
Right.
that's pretty much guaranteed to go up in value if you're around that.
Yeah. Now, if someone is, I'm assuming you guys work with syndicators and fund managers that are looking for capital, and you guys are another a liquidity pool essentially for them to identify and, find the suitability between your customers and their opportunities. How does that work for, let's call the deal or the sponsor side?
Sure. Well, so the sponsors, though, those capital allocators or capital accumulators, they come to us, but we decided to stay purely in the business of being the platform
Okay.
to enable people to create the IRA without, so we have no incentives, we have no advice or recommendations that we give. People purely find them on their own. Now, if they're registered and they have clients with us and we know it's an opportunity that someone can do, we sometimes might mention that on a partner's page, but we have no economic incentive or economic relationship between the two. So I liken it to where if you think about, let's say, a Charles Schwab type company, they're known basically as a do-it-yourself discount broker. Um, so when someone goes to Schwab and opens an account, if you're going there for that particular side of the business, the expectation is that you would decide which investments you would purchase that Schwab allows you to hold.
Sure.
and so forth. So we're kind of like that side of Schwab, but for the IRA world. People come to us, they open the account, we help them get access and transfer in their capital from an outside provider, a like-kind type of account, a 401k rollover into an IRA with us, or an IRA transfer of cash into our IRA. And once it's there, they can then operate the account. And the way we actually enable that, they found the deal on their own. But when someone opens an account at Rocket Dollar, we effectively create a bank account that sits within their IRA, and that allows them to find, source, and complete the paperwork to go into that investment. And then when the investment paperwork is completed, you typically get a notification to say, "Hey, great, Matt, thank you for joining our syndication for XYZ storage unit facility here on the outskirts of Austin, Texas. You can send your $50,000 syndication unit price to this bank, and here's our wiring instructions." So you would go back into our portal, and the integrated bank portal allows you to basically initiate the ACH or the wire of the money that's in your IRA, the cash that's in your Rocket Dollar IRA, to go to that investment. And then it's
Beautiful.
there.
That's great. So to kind of clarify, from what I'm hearing, is if you're a syndicator or a fund manager and you're looking to raise capital, it's not necessarily coming to you guys and saying, "Hey, who do you have that, might be interested in this type of vehicle or opportunity?" It's more so of, "Hey, investors, if you've got IRA capital that is essentially locked up and unable to transfer out into an opportunity like ours, Rocket Dollar is a great option for you to explore to transfer those IRA funds into, which will give you some liquidity to come into our deals."
Exactly. And it's usually the sponsor of the deal who's, they're out there trying to go find more and more capital. And the
Right.
typical response they get is that, "Oh, if I had some like cash lying around, I'd love to be able to do this deal. I'm way up on Nvidia, or I'm way up in this particular stock, but that's just stuck in my IRA account or something." So it's usually the sponsor that we would communicate with, have a call with, and explain the concept. And then the differentiator, because we're not the only provider in this sort of alternatives capable IRA space, but I think that what we're the top in the industry at is having that integrated sort of seamless bank integration, so that it's like the same speed to make that private investment as if you were doing it with your own taxable cash account and so forth, because the mentality or the process is exactly the same. So we've created the speed of being able to do private investments with the assumption that if you had cash, just taxable cash in a bank account, or you had a brokerage account you could turn to cash, you could do this private deal. But in the IRA world with our competitors, it's typically a very different process for making that private investment. So what we've done is use technology and our bank integration to make the process that people are familiar with in making a private investment very similar to the exact same way you would do it using our IRA account. Fill out subscription agreement, you get the approval, you get the instructions on where to send the money to, you go into the bank account portal, and you wire the money out to that investment.
Who does this make sense for, right? I'm sure the traditional IRA custodians are going, "Don't do this. Keep your money with us."
Yeah.
Who and when does this make sense for?
It makes sense that the individual investor, and remember, I think despite what people think, and maybe our customers sort of lean this way a little bit more than the average population of what I would say are mass affluent investors. So let's start at that level
Okay.
first. So probably the people that open our accounts, we wouldn't be the first account that people would open. So when I say mass affluent, there's a different definition, but I worked in financial services. I had an RA firm with over $2 billion, and then I worked at Merrill Lynch for 10 years prior to that. So I refer to mass affluent as someone with investable assets of between 250,000 up to $2.5 million, and then adjusted kind of for age and stage of life in
Okay.
their career. So a 30-year-old with $250,000 is a pretty high value potential customer for Merrill Lynch or do it yourself at Schwab or for Rocket Dollar, maybe the same way that a 60-year-old person with $1 million would be, just because of the time difference in age. But the accounts are appropriate for people who have established investment capital or made investment returns in what I would say are your more starter or foundational accounts. So that's your contributing to the 401k, maybe
Right.
even accidentally because they automatically enroll you into it. And you start to understand how the investments work, and you leave that job and you roll it to an IRA, at which point you're able to purchase and research maybe stocks and mutual funds of your own, and continue to grow that capital. Um, and then when it gets to the point where you feel like you're a little bit over concentrated into just this public market, you might say, hey, I'm going to take $100,000 of my now 500,000 overall tax advantage retirement assets accumulated over the course of the last 15 years and go into a couple of real estate syndications. One is a storage unit facility, and then the other one is an apartment complex, both in areas in the outskirts of the city I live in. So I feel like I'm my own Warren Buffett with knowledge of the space, because I know Costco's going over here, and I know they're building, XYZ over on that by the other property, and so forth. So both will be good and accretive to my investment return. So it's not the starter account. I just liken it to where there's a really big difference. Like they use the term homeowner between a first time homeowner and someone who's buying their third house. Like by the
Right.
time you buy your third house, I mean, you know what you're doing. You're also rolling in a lot of equity, so you typically have like a lower debt load. For example, you know how to negotiate. You remember to do this thing called an inspection, that you might not have done in your first time home purchase, and so forth. So maybe Rocket Dollar is akin to the account for be the third investment account for
So
an individual,
a
not
little
your
bit more
first.
seasoned, right? That this is not your seed account. This is, a account that's been sitting and accumulating. You've got some savviness to your investment, uh, you know, confidence and experience, and obviously, talk with your CPA and tax advisor, but understanding the pros and cons of rolling out of one of those types of IRAs into something like a Rocket Dollar. Mainly, people are doing it because they believe in one, maybe the diversification, and two, the arbitrage of the opportunity they believe they can capture, even with maybe paying some of those fees or penalties of rolling out.
No, there'd be no fees because we're an IRA provider. So you don't need to talk to your tax advisor about that part.
Okay.
And as you alluded to earlier, if you're someone who works with a financial advisor and you mention it to them, you'd have to take that what they say to you with a grain of salt, because there's a component of taking assets away from them and you compensate them based on a percentage of the assets you hold with them.
Right.
You have to take it with a grain of salt, because are they really sort of stipulating or communicating to you that they believe that any investment not within, let's say, the public market world is not appropriate for you? Or are they saying this because that if you were to take, let's say, 15%, 20%, 25% of your accumulated capital that you have over there that you pay a percentage based fee on, um, uh, that their income and their compensation would go down for the account. So, but we're an IRA provider. So if you do a 401k rollover to a Rocket Dollar IRA, there's no distribution there. It's a like kind transfer. It's no different than if you decided to
That's great.
move your IRA from Fidelity and decide to work with a financial advisor at Edward Jones or Merrill Lynch.
Got it. Got it. So yeah, it makes sense, right? You lowering some assets under management and the fee that that advisor may be losing out on, something to take into account. Um,
Exactly. I
but
mean, like I said, I worked 10 years at Merrill Lynch, and I could tell you right now, it was pretty much a sales job, and not one single metric ever like measured the performance that we got for our clients. It was all based on the accumulated amount of assets that you brought in and the revenue that you could generate, and if you could maybe refer that out to other divisions of the business. So Merrill Lynch, of course, is a subsidiary now of Bank of America. So if you had a client of yours and you referred them out and they did a lending product like a mortgage or credit cards, then you got, let's say, like, additional bonuses for doing that. So none of that was ever based on, hey, we're going to compensate you higher or give you a bonus because you beat the S&P 500 for your clients with a
are
lower risk adjusted return. That
are
wasn't at all in
there
there.
any restrictions or legalities or just things that maybe anybody receiving funds from Rocket Dollar under the structure that you guys offer that they should be aware of?
So I think if the way you're asking the question, you'd be saying that could the sponsor or the issuer of an investment, do they need to know? And the answer is yes. So they can't get all of their funds coming from retirement type of accounts. So there's usually, depending on the structure of the fund, there might be a 25% overall limitation. But if any issuer is accepting these types of funds, then they would have already talked to their fund administrators or their fund creation attorneys about where those guidelines and where those ratios need to be and have their investment structured. So there's a little bit more in the weeds of certain things that they wouldn't be able to accept money on, but for the most part, if that's why we're not recommending the investment. It's usually the issuer. And if the issuer knows that they are unable to receive some component of the overall assets they accumulate from
Mhm.
tax advantaged or ERISA governed accounts, then they already know the numbers and they know the ratios, they know the limitations.
Now, for somebody that is investing out of Rocket Dollar, and you guys basically, if they make the investment, they get a return. The capital gets returned back to you guys. Is that tax free?
So the capital gets returned into an IRA. So any investment you own in an IRA is no different. So just understand that what we offer is an IRA account that is not structurally different in any way from an IRA account that would be at a traditional financial services company. So let me give you an example. In Rocket Dollar, let's say you own a rental property, a single family rental property using your IRA dollars. And every month you have a tenant in there who pays you rent, and so forth. So that rent income you wouldn't be able to just take out and use on your own because it gets paid back into the IRA unless you're 59 and a half or older, at which point you could ask for that money to be removed from the IRA and distributed to your bank account, for example. Now let's say that you are an individual, you own Johnson & Johnson, Microsoft, and JP Morgan, all three dividend paying stocks in your IRA account at Fidelity. If you're under 59 and a half and you own it in an IRA, you can get the dividends paid back to you, and you can choose to reinvest it into that stock, or you could have it accumulate in cash within the IRA. But if you're over 59 and a half, you may be living off of those dividends. So you may ask that those dividends be transferred to your outside bank account at Chase or Bank of America
Okay.
on a monthly basis. So investment that you make inside of an IRA when income comes in is actually just inside of the account. It's not taxed as ordinary income in that year. It's just taxed when you take a distribution out of the account overall.
Understood.
If you do so before the age of 59 and a half, there is an IRS tax penalty of 10% plus the taxes you would owe. If it's after 59 and a half, then you would just pay the taxes owed on the amount that you take out, but it's
Understood.
controlled. So you could accumulate 15 years of rental income,
Right.
buy another property over that time, then decide that you want to take 50,000 out just because you turned 59 and a half right then, and you would only be taxed on that $50,000 even though you've made accumulated maybe 127,000 in income in the 15 prior years
That's
off
great.
of the property. So
Now, you guys have worked with deal sponsors before? Are they coming to you guys and connecting? I'm just curious. I guess my question is going to be more around, do you see any best practices that you would recommend for deal sponsors to attract these types of investors that are working with you guys at Rocket Dollar?
I think it's just being aware, because usually when deal sponsors are reaching out to us, it's because they've had a couple of potential investors reach out to them first and say, "Hey, I'm thinking about doing your deal. I want to learn a little bit more about it, but I'd be coming in with IRA dollars." And then the first time the issuer gets that call, they kind of have the just nodding along, saying, "Oh yeah, I know exactly what you're talking about." I have no idea what they're talking about.
Yeah.
So then they got to get smart on it, right? So they're out there looking for a provider to maybe provide them with education. So for us, we put a lot of the information online, so we get tons and tons of visitor traffic to our website, but not necessarily from customers. It's from people trying to learn. So everything that we put up there in our knowledge base, which is, I guess, the fancy tech forward way of saying an FAQ, is really related to understanding how the accounts work and what they do. And then from the issuer standpoint, we do establish relationships with agents, but we mostly do that for them based on tracking purposes. So they want to know that, hey, we talked to 25 potential investors, told them about, that they could use IRAs, and here's one of the providers that we work with, or we've, been able to operationally be set up to accept money from. And then we have a tracking code. So we could tell them that, hey, of those, nine of those people came in for a total of, $392,000 last month, and so forth. So agents like that. We call them agents. That's what we refer to the issuers. But, they like that because now, of course, their whole goal is to accumulate more capital.
Yeah. Yeah. What do most investors get wrong about using retirement funds for alternatives? Or if there was, one thing you could tell every investor about, using a self-directed account, what would that be?
I Yeah, it's funny. It's a little. It's probably against my own like business interest, but I would tell people that these aren't the accounts where you should be putting the majority of your money. It's really a supplement to help you diversify into asset classes that you really can't access in your traditional accounts. But and you should actually be looking for investments that are relatively long term, somewhat illiquid, and have a chance for outsized returns, or they produce outsized incomes. Rental property is a good example, right? The percentage of income that you'll get off of rental property is very high compared to the dividend amounts that you'd get off of owning a stock.
Yeah.
uh, just by virtue. So you should own those in tax protected accounts. So I guess number one is I'd tell people that this is not a put all your money in and set it and forget it type of account. It's a supplemental account to your overall investment portfolio. And then number two, look to put some of those investments inside. People make mistakes, but there's investments that are probably better held in actual taxable accounts. And then there's investments that are better held in tax deferred, tax advantaged accounts with a long term time horizon and the inability for you to do anything with the money other than make an investment, which is perfect for an IRA. That's literally the definition of IRA accounts.
How has investor behavior from your perspective changed kind of post COVID, especially with inflation, interest rates, different asset classes becoming a little bit sexier, safer? What have you seen?
Well, I I think that I think what's happened is that the overall accumulation of capital, just generally, and maybe the availability of information about investments, and then with the new administration that's come in more recently, so we're not talking COVID here, we're probably talking more like late 24 and through 25 so far. The administration has become friendlier to private investments in general. I mean, as
Yeah,
we speak too, our current president just announced that through Trump media, they might launch a blue chip crypto ETF right now. So, I mean, you imagine like a prior sitting president announcing that they were going to launch a mutual fund with their name on it,
crazy.
for example, right? But and offer American companies or something like that. But we live in that world today. So I think that the investor sentiment, along with people making a lot of gains in other types of investments, we are getting this component, us at Rocket Dollar, of a taking chips off the table
Mm,
and looking to reallocate in things that are completely like a zag to the zig that made them the money in the first place.
makes
That's
total
what I
sense.
see.
Are there any trends in private capital markets that are really exciting you that you're kind of keeping a pulse on or that you're seeing have the potential to kind of come to fruition in the near distant future?
Well, it's happening now. So whether really well known or not, but it's one of those where it's happening, and then all of a sudden everyone's going to know about it. But you're seeing a lot of these private firms or private equity type firms, and we're talking about the biggest of the bigs here. So like the Blackstones and the KKRs. Let's just say that they're the tier A of private capital, and those are probably not the types of investments that people are doing in Rocket Dollar accounts. Generally, they're but those companies on the tier A side are teaming up with the largest, let's say, retail brokerage firms and retail investment firms. So, um, Blackstone and Vanguard have a partnership. So that's a very odd couple. So I think there was that old TV show probably before our time, but I remember the Odd Couple. If you know financial services, this is an extremely weird, out of this world, oddest couple you can imagine.
And what does that mean to you? What are you reading in the tea leaves there?
I'm reading into that. I think that the traditional incumbent financial services companies realize that they have a gigantic, in a lot of cases, 5, 10, 15 million, person base of customers, and they're really selling them different package versions of the same 3,700 or 4,000 publicly available stocks. And then you got the private investment world who's saying that, look, for decades, we've basically gotten all of our capital from endowments, institutions, family offices, and ultra high net worth individuals. And, probably the endowments, institutions, sovereign wealth funds, and governments are like at the way top of that list. where else are we going to tap in the world to go get capital? And the idea would be, well, tap into the retail investor who controls tens of trillions of dollars. And over the next 10 years, that installed base of 15 million people, a lot of them will be passing down money to folks, their younger generations are at 30, 40 years younger, who might be more comfortable doing something outside of just a traditional index fund or buying 5 dividend stocks and
Yeah.
holding them for 40 years. So I think it's just a marrying of this sort of, we'd like to get more capital. You'd like to have more product diversity, make higher margins. Why don't
Hmm.
we partner up together, even though we're the oddest, weirdest, most out of the world couple that the world has ever seen in financial services?
What's one innovation in the retirement space that you would love to see next?
I'd love to see a better, like, sort of, well, this would be the big one for me, would be that um, create a system. And I have an analogy for this too. It happened in the phone game in the early 2000s, but our first cell phone, you and I, based on probably what I surmised to be our ages, was that we had to stay with the same cell phone company because if we left them, we couldn't take our phone number. They said, "Hey, you can leave if you want, Matt, but we own your phone number. So then you're going to have to, tell all your friends what your new number is because we keep the number and we're going to assign it to someone else." Well, the government got involved and changed that rule and said that no, the number actually belongs to the individual, and you have to let the number go if they want to fire you and go to AT&T or Verizon. And in the retirement space right now, it's still extremely hard for people to move what is effectively their money
Mm.
because the providers in the space, I think they have this attitude, uh, um, a little bit of a condescending attitude that they still believe it's their money. And I think that the government, if they get involved and make it easier for people to move their money freely from one institution to another, that's just an attitude change. It's not
Right.
the institution's money, it's the individual's money. So allow a seamless, instantaneous transfer if Matt is no longer happy with X provider and wants to go to Y provider. That would speed up the velocity of money. It would also remove the friction because there's a large percentage of people in America who never move their accounts around because they know it's just going to be too much trouble to do it.
Right.
They're not satisfied. They want to go somewhere else, but it's too much trouble to move it. And, that's not really, that's not, those are rules and protocols in place that aren't really in the spirit of the money belongs to the individual investor.
What do you think is one thing that traditional financial advisors get wrong about private investing or alternative asset investing?
I think what they get wrong is that they think right now these partnerships that exist. So this isn't the only one that I mentioned earlier. So the Blackstone and Vanguard, I've written about this before, but Edward Jones is partnering as well to offer alternative investments in a platform. So I think what advisors get wrong is that I think that they're going to long time hold on to the view that the alternative and private investments that they offer to their clients are the ones that their clients want. So the ones that they're going to offer are going to be based on the form of a partnership and creating some sort of quasi like publicly registered vehicle to then package and offer to their clients. So by true definition, yes, it might be based on a private equity firm type of investment, but you securitized and packaged it in a way to where it's standardized and fits into your methodologies to do it. So advisors are going to tell their clients or pat themselves on the back and say, "Hey, I'm already covering this alternative private stuff. I'm doing that." I'd argue that the private investments that people could really benefit from are in those realms where they have that edge. Like if they want to invest in a private company, um, let's say it's some technology startup and they have a chance to get in on this, but the person that wants to invest in it, the startup may be based on making batteries more efficient, for example. And this person has literally spent their entire career, the potential investor, individual investor, working in the research space related to batteries and so forth. So is that person going to be more qualified to determine like what company may really take off? And then
Yeah.
the problem is that that battery company today, if they're good, does not have to access the public market. So truly it will not be available until it's at a point where it would debut in the S&P 500 and already start at number like 10. I mean, you don't do that either in tennis or golf, right? There isn't someone who just hits the scene at 11 years old and they're already,
Yep.
Rory McIlroy.
Yeah. Yeah. That's a great point there. I'm curious, these last final two questions, more a little bit about your personal experience through Rocket Dollar. What's the most creative alternative investment that you've seen funded?
So when you say creative, I guess I'll probably let me interpret that
Creative,
as weird.
wildest,
Yeah, well,
however you want to classify that.
so maybe not so weird from where I'm at in Texas, but people do own cattle, so that's one. But since this isn't my world in the state of Texas, we have people that do own competitive racehorses, and then this is a little more relevant, but and with the times. But one of our highest ROI investments that someone's made using a Rocket Dollar account was to purchase shares early in a pickleball league in the year 2018. So person was clearly ahead of their time and bought equity shares privately using a Roth IRA. They converted their traditional IRA at Rocket Dollar into a Roth to make it truly tax free. And they purchased early founder shares into a pickleball league, and it had a tremendously high ROI.
There's an alternative investment that you don't hear about too often.
Exactly. Yeah.
Best use case that you've ever seen at a Rocket Dollar account? Is it the pickleball, the highest ROI one, or what would you say is the highest ROI one that you personally have seen? And whether it's a boring, unsexy investment or something cool and eclectic, what's something that you guys have seen pass through the doors of Rocket Dollar?
Well, so the pickleball, it has one of the highest ROIs. Then there's a couple of people who'd bet early on crypto hedge funds. And these
Mm.
crypto hedge funds weren't actually just investing directly in the crypto, but it was a hedge fund that were created to back like early to back early coins that now have become blue chip coins. So yeah, we had a crypto hedge fund that was very early in a cryptocurrency asset called Solana.
Mm.
So they invested at a cost basis of under 15 cents.
Oof.
And it was the
Well, I
fun. So
think
even
what
after the fees and
Soul's
expenses,
trading at 160 today, I think something like that, or
yeah, and not a
158. I
dollar
think it was
60,
bouncing around.
160. So you should clarify that
Yeah,
for the
yeah, yeah.
audience.
Sorry,
Yeah,
$160. So if your basis is at 15 cents, you did all right there.
exactly.
Well, Henry, it's been a pleasure chatting with you, brother. And I love your model. I love what you guys are doing. I love how you're bridging the gap and creating more opportunity for investors. Um, for those that may want to know a little bit more about Rocket Dollar and how they could potentially leverage your platform or learn more about you guys, where's the best place for them to do that?
So come to the website, rocketdollar.com. There's tons of information there. So there's a partners page so you can get an idea of what our customers are investing in. We're not making recommendations for any of those. Then there's a knowledge base tab as well with a whole bunch of articles and content, just general questions, how these accounts work, how they started. And then if that's not good enough for you, on the upper right, we have a phone number. So during business hours, Central Time, you can actually call. So oddly enough, I'm going to be. I still answer the phone, so I'll be the one that picks up some of the phone calls next week.
Dang, you get to
It's
talk to
summer. I got
the
people
man
on vacation,
himself.
so yeah.
Well, Henry, it's been a pleasure. Thank you so much for coming on today, guys. We will link up all the resources, websites, any references that were mentioned in today's show. Henry Yoshida, thanks for coming on.
Thanks, Matt. Appreciate it.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionaireMindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, You want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.